What's up, guys? This is Brandon from 13marketmoves, and I'm super excited to present you another earnings opportunity, this time on EL Estee Lauder. I know it sounds a little boring, but listen me out. I think we have some tremendous opportunity if the following conditions are met. Okay, so they report earnings tomorrow morning before the market opens, and we want to present this earnings analysis of EL and kind of show you what we think is going to happen. And so we spent a lot of time on this, and so if you guys have any questions or you like what we're doing, just put some comments below. And also, if you have questions, remember the 20-minute consultation with our senior traders. It's free. Just click your link below. Okay, now let's go forward here. Now, the main thing is a couple of things to figure out about EL earnings history, okay? And there's only two things that I want you to pay attention to. Number one, EL's earnings on August 20th, which was basically the Q4. Their Q4 is a little weird. They missed badly, okay? Now, the question is it going to continue? Is it going to continue? Well, the earnings have been fairly decent, and so far, our current earnings analysis shows that even if it's stellar and if it's priced for perfection or you're near the top, people are selling these. As you have noticed about Facebook and our predictions about Amazon and the likes, and that's kind of the trend. And will that continue on into Estee Lauder? And with all these COVID and everything else, is that fear going to affect these consumer discretionary consumption? So let's find out. Now, the other thing is on October and November months, where they report the Q1s, it's generally been, if you look at the earnings history, it's been pretty decent, okay? They meet their numbers. The question again is, are we going to get one of these guys here in this quarter? Or are they going to beat their numbers, but then they're going to be a little shy about their guidance, or something's going to happen? And the last component is, what is the market doing? We've had really significant volatility, not as bad as February to March. That is historical. But, we're, as we predicted, that we are going to undergo in November a significant correction into election years. And I believe we have a video coming out on that shortly. Okay, so the question that we want to ask is, what's going to happen? And we think that there's going to be a pretty corrective move coming in EL, but we have to be a little bit careful, because EL generally tends to behave in a fashion that if you're not quick, those profits can go away from you. So let's review our charts. Real quick, I want to go over the kind of the macro picture of the daily chart extending all the way to Q1 of October 31st, and then where we are here, okay? And then I wanted to kind of give you some pearls of wisdom here. The problem with EL this year and in general has been that even if they report bad earnings or good earnings, they tend to gap down and then sell off a little bit, get your hopes up, and then it reverses and moves higher like this here, okay? Same thing here. In Q3, they reported pretty disappointing, decent but disappointing earnings, and then it popped down and then kind of sold off, but it had a wide range of move. And then in Q2, they basically had an upbeat earnings, guidance was good. This was right before the sell-off that we had. Anyways, the issue is that are we in this type of situation? If they reported good earnings, they popped, but then they dropped a little bit, and then they rallied, and then, of course, the inevitable sell-off that occurred. In Q1, October 31st, 2019, they beat earnings, but their guidance was weak, and then so it sells off again. It gets your hopes up by selling off, it stalls out, and then closes near the opening candle, and then it takes a couple of days to sell off again. So EL is something that if you're not quick in the morning at taking your profits, as I'll show you, sometimes it can break your heart, right? But I'm also trying to make a case that, well, this time around, it may be a little different. We are kind of sitting off at a cliff, and this chart, we think there's an analogy here. And if the market gets volatile, And we continue to have some sell-off leading into the elections. We think that we're going to, well, maybe not to this magnitude, but I think this sell-off is just getting started. And if you don't remember, go back to 2018, of October, from September to December of 2018. That was a pretty significant sell-off. Now, not to the crash situation like this, but I think we're going to get that. And if that happens, oh boy, we're going to have really good day tomorrow in trading this particular stock. Okay, so let's move on. Okay, so this is the earnings history part on Q1, August 20th, 2020. This was the Q1 not too long ago, right? A few months ago. What happened? They reported really crappy earnings, as I showed you before. And so it gapped down. It went from 212 all the way down to like 200 level. So it gapped down minus 12. And then it opened and then decided to run up a little bit, retrace, and then it stalled down. And that's your cue. Generally, this is how this thing works. If it gaps down, rallies on lower volume, and it stalls out, give it like 15 minutes. Sometimes it's like a couple of minutes. It shoots up and then comes down. So you got to be pretty nimble. And goes from about 200 down to about 194. There's a quick $6 or $7 that you can make on this, right? And if you miss that, there's another entry opportunities. Really, the best time was at 10:30. Remember, this is a 30-minute chart that I'm showing you, partly because I can't go this far back on a 1-minute chart or, those kind of things. So I basically wanted to break it down a little bit for you. So it has a tendency on bad earnings to gap down big and sell off a bit and begins to rally higher. But you got to understand the difference. So this is for a little more experienced traders amongst you, that if the volume starts to peter out as it rallies, and it starts to reverse, that's when you got to get in. And you could catch a quick, maybe 30-minute trade that'll yield you maybe 200 to 300% here if you're quick. Okay? That's in a normal situation. Okay? But we're not in a normal situation. Let's go back to May. These are all 1-hour charts. Well, May 1st, they reported pretty decent earnings, but what happened? They popped higher and then stalled down, and then the volume came in on the sell side. So basically what happened, they opened here, right? And then they just retraced all the way to the top, and then it started to sell off. So this is a tricky short. So you have to wait until the full retracement rally, and then you short the top around 9:40 a.m. and then that's when it sells off. Of course, if you don't want to deal with this, maybe you sit on your hands until about 10:30 to 11. Let it just get really bullish, and then again, the prior day's hourly candle high, and if it stalls out there, then enter that short trade at 176 and has a range about 171-ish. Okay, so that's about a $5 play. Okay, in a normal situation, and keep telling you, I don't think this is going to be a normal situation going in on Monday. Now, on February 6th, they reported really good earnings. This is right before the historic crash that we had in March. What happened? It gapped up, it stalled out. This is what we're looking for. Even if it gaps up, don't be afraid to short this as long as it stalls out and then the volume comes in on the short side, and then you short the crap out of it at the top and then get out. Get out by like 9:40 to 10 a.m. Okay? And then this gave you a couple of additional entries at 10 a.m., right? Right here. But really, if you're quick, you can probably bag a pretty decent profit in the morning before the hour's over. Okay, who doesn't like that, right? But this isn't a normal situation. But I'm telling you right now, we are not in a normal market situation. Nothing is normal about this year, right? So October 31st, this is the first Q1 last year, 2019. Reported pretty decent earnings, but it gapped down anyways. And so what you wanted to do was you wanted to short the opening bounce and get out by 10:15, right? In this situation, really, here's 10, starting at 10 a.m. All of this move down occurs within 15 minutes as it hits 10 o'clock, okay? So basically, again, let it stall. Let it try to retrace and stall. Now, if it does this and then starts going up on high volume, get the hell out. I mean, there's no reason to short. Again, Estee Lauder is a little tricky to play, but if you have the guts to do it and if you understand your market moves, especially if we get something like maybe a move 2 or a move 3 situation tomorrow, by all means. Okay, this is why you got to understand the 13 market moves, right? Okay, so let's move on. I'm going to compare to 2018 Q1. And so what happened here? They reported stellar earnings. Remember, I told you 2018 was a really bad corrective correction that was occurring that year. And yet, they report good earnings. And I mean, this was like a blowout. They did really great earnings. But what happened? They stalled out. So you got to short the pop. And then you stay in the trade until about 11. Only if the market is selling off and is in a bearish situation like right now. So this would have yielded you 143. And if you were patient enough, almost 10 to 11 points of downside. Again, this is probably analogous to what we're going to get. I think EL generally reports good earnings unless COVID is catching up to them and people aren't spending money like they are. Or even if they report great earnings, you saw what happened to Facebook, you saw what happened to Google, Amazon, and the likes. They're reporting stellar earnings, and guess what's happening? They're selling them. Okay? And we think that's going to continue with this stock. Okay, so the other thing is, let's look at the 2017. What the hell happened in 2017? Well, in 2017, they reported significantly good earnings. There's nothing going on. There was no elections. There's none of that stuff. And so it gapped up and it started to go. It opened here and it started to keep going on higher volume. Maybe it pulled back a little bit on lower volume, but look, just traded in a channel. So again, volume is key. Pay attention to the pre-market volume and also at the opening volume. If there's a huge buy-side volume, and I wouldn't really want to touch it, right? Especially in this situation when there's only 3 to 4 points. Okay, just warning you. But we don't think we're in a 2017 type of situation, right? So let's look at the technical picture. And I already showed you on the macro picture that we may get something of a variety of what we got at the end of February and March 2020 this year when we had that massive crash. I'm not saying we're going to get a crash, but you know what? Technically, the damage was done. Maybe we get a little pop move too so that, this thing will just pop a little bit after earnings so that we can enter. And we believe this is going to be a multi-day hold. But main thing is that RSI steep slope, declining RSI, which is super bearish. Okay, we really topped here, so we're near the top, right? We're near the all-time highs of that area. We found support at the 50-day moving average here, and then we kind of peaked below my customized Bollinger Band here. Okay, and so this Bollinger Band really is going to determine. This is, I'm hoping, the range. I hope it doesn't gap down, but if it does gap down, we think it gaps down to somewhere here. The next major support level from 210 is about 207. If the market gets super bearish, we think there's a super nice range down all the way down to about 196 level. So, target one is going to be about 207 to 195. That's what we're looking at over the next week. Remember, the other thing is EL doesn't have weekly options. So this is a monthly option. There's about 2 weeks left in the time frame. If you're kind of caught in a bad entry, you can hold for a little while. We think that this thing will continue to sell off. Okay. So Q4, here's the caveat. Q4 traditionally is a strong market, strong month for them. Market is weak, and EL follows market trend significantly, okay? So if EL breaks this 215.54 and weak guidance or earnings, short the hell out of it. This is like the demarcation line right here. What are we going to do? So the bottom line is we're experiencing not unprecedented, I better not say that. It seems like it, because we haven't seen volatility like this in March. How short of a memory do we have, right? Or do I have? Maybe I'm just getting old. But anyways, we're experiencing high volatility in the marketplace. And I think this volatility continues even after elections. And so that doesn't mean the market's not going to pop or drop. But EL is going to be a little tricky. So, be careful about the volume. Just volume is going to be the key. But I think there's going to be more than outsized We just showed you the technical analysis. We have a significant range on this for this earnings. If earnings are good and it pops but stalls within the first 5 minutes on low volume or lower, you saw what happened with the Facebook call that I did. It didn't stall at all, did it? It just, you had to buy in the morning. And even if you missed it for the first 5, 10, 15, even 20 minutes, you guys had an awesome entry on that play. But get ready to short. If earnings are below a blowout and guidance is good and it fails to move higher, you short the crap out of it, okay? If the market is getting kind of dicey, okay, and I think market may be pricing in, I don't know. I mean, the market was pricing in a Biden win, and the fact that it's selling up, are they pricing in a Trump win? I mean, those are all questions that's going to be answered shortly, right? But we don't care. We're going to let the market dictate to us how we trade. But historically, EL tends to reverse after about 10:15 to 11:45 a.m. Remember, this is a little tricky one. You know, if you have good profits, think about getting out of it before about 10:15, 10:30-ish. But if the markets are weak and we get another 2 sigma event, for those of you that don't know, sigma means if we basically have a standard distribution curve on a on your options, right? Here's our kind of the middle, right? And so market makers will price in a 1 standard deviation. That's all it means. If we get like last Friday's 2 standard deviation move, we're gonna see a range at least from 9.5 to 14 in one day. Trade carefully, okay? I can't tell you, this stock is like a mad whatever, right? This stock has a history of doing well in Q4, but it obeys the general market conditions, but it can get very, very whippy. It corrected after gapping up and coming down, and we had a significant shorting opportunity, and we think that might happen here. So what you want to do, here's the pearls of wisdom here. Buy puts after a brief pop, or if it starts to sell off, beware of the 10:30 a.m. reversals, okay? And so just watch the volume. I mean, it will tell you, it'll show you. I mean, if the market is going to get impulsive and start to sell off, then this will sell off along with it, as you saw on Friday. But you also saw it kind of recover. This is what the stock does, okay? So realistically, this is kind of the call that we're making at 13 Market Moves. I hope you enjoyed this video, and I hope you make a lot of money, tell you the truth. Again, we're around if you want to join our community, or you want to take a course, or you want to talk to a trader, which is free, about anything here. Click the link below and schedule your 20-minute consultation. Okay, this has been Brandon. I really enjoyed making this video. Let's kick some ass next week, and on this trade on Monday. Thanks a lot. Bye-bye.